Have you ever wondered how the stock market works? Or perhaps, what exactly is a stock? Well, you're about to get the answers to these questions and more. So, sit back, relax, and let the journey to understanding the stock market begin. Firstly, let's think of the stock market as a vast digital marketplace. It's where buyers and sellers meet to trade shares of publicly traded companies. Now you might ask, what is a share? Simply put, a share represents a small fraction of ownership in a company. When you buy a share, you essentially become a part owner of that company, however small that portion might be. Now, on to the big question. Why do companies sell shares? The primary reason is to raise capital. Think about it like this. Imagine you're trying to build a house. You have the blueprint, but you need funds to buy the materials. So, you invite others to invest in your project. In return, they receive a stake in your house. The same principle applies to companies. They sell shares to raise money for various business operations like product development or expansion into new markets. Next, let's discuss how the price of a stock is determined. A stock's price is influenced by supply and demand, just like any other product. If more people want to buy a stock, demand, than sell it, supply, then the price moves up. Conversely, if more people want to sell a stock than buy it, the price drops. Now, let's tackle the concept of a stock exchange. This is the place where these transactions occur. Some of the most well-known stock exchanges include the New York Stock Exchange and the Nasdaq. So, how do you make money from stocks? There are two main ways. The first is through capital gains. This happens when you sell a stock for more than you bought it for. The second is through dividends, which are a portion of a company's earnings distributed to shareholders. However, it's important to remember that investing in stocks also comes with risks. The value of stocks can go down as well as up. Therefore, it's crucial to thoroughly research and consider your financial situation and risk tolerance before diving into the world of stock market investing. Now, to give you a better sense of how these stock prices fluctuate, let's take a look at some real-world examples. Consider the tech giant, Apple. If you had invested in Apple in 2002, each share costing less than $1 today, those shares would be worth around $150 each, a staggering return on your investment. On the flip side, consider the case of Enron, once a high-flying energy company. Their stock was trading at a peak of $90 per share in mid-2000, but by the end of 2001, it was practically worthless due to corporate fraud and bankruptcy. These examples illustrate how the stock market is a dynamic environment where prices can rise exponentially or plummet to zero based on a variety of factors. This emphasizes the importance of doing your research and understanding the risks before investing. To recap, the stock market is a digital marketplace where shares of publicly traded companies are bought and sold. Companies sell shares to raise capital, and the price of these shares is determined by supply and demand. You can make money through capital gains and dividends, but investing in stocks also comes with risks. So there you have it, a beginner's guide to understanding the stock market. It may seem complex at first, but with time and a little patience, you'll be able to navigate the world of investing with ease. Remember, every great investor started somewhere, and you've just taken the first step on your journey. Happy investing!